And I believe we are live. So yeah, doing another live stream, Q&A live stream for you guys. I know you guys seem to like these every so often. And it gives me just a better opportunity to answer to a lot of comments rather than just posting little replies. I can go into a bit more detail on the live stream, and I think it's just some good interaction there. So I'll give it a few minutes just for everyone to join, because I tried to do a little bit of more warning that I was going live this time. So I can see a few people joining. Just let me know that you can hear me okay. My AirPods tend to like disconnect sometime. So yeah, I was actually in a Zoom call like with work a few days ago, and I was there talking away, and it was like, we can't hear you, and I was just like looking like an absolute idiot for a while. So, but it seems like everyone can hear me, which is really good. So yeah, I'll let everyone give a few minutes for everyone to join. Try to, like I say, try to give a bit more early warning than what I normally do. But yeah, I mean, stock market wise, I mean, everything going not too bad, I guess. UK's been a bit more quieter recently, hasn't it? US, obviously, Thursday, Friday was a little bit of a shock. Oh, well, we kind of expected it coming, but obviously, whenever it does happen, like where we got to see the stock market go up like what 0.5%, 1%. When it goes down like 5%, it's like still a shock to the system. But like, obviously Monday's Labor Day, so the US stock market won't be open on Monday. Obviously, it's open on Tuesday. We'll see where the stock market does go on Tuesday, and probably Wednesday. We might see people trying to buy in on Tuesday, then Wednesday, bang, we'll get another big red day. I think Tesla was down like 7% after markets because of it not being in the S&P. So maybe we'll see where Tesla goes on Tuesday. But yeah, we'll see what happens. But yeah, any questions, like I say, just fire them in, and I'll try give a bit of a reply to a few of them. If there's any questions you want me to answer. So yeah, I think I see a few questions coming in about National Express. I'm actually going to do a video tomorrow on National Express, so I'll kind of not want to say too much about it, but it's one of those, the stock was up from its COVID lows 150%. It's pulled back again. It's not a bad opportunity in my kind of opinion. So I think it'd be a good one to go buy if you haven't bought it. But like I say, I'll save it too much for it. Yeah, the CEO's gone to Persimmon on National Express. What price will I jump into Tesla? I'm thinking about, I like to say below 350 if I can. I don't know if it'll happen. My most exciting stock that I currently have, I really liked Huya. I think that's got massive potential, 30% revenue growth, 30% earnings growth, clean balance sheet. I like him though recently, so probably one of them two. Royal Dutch Shell, I don't like the industry. I'm actually talking about them this week at some point. So, but like I'm not a big fan of the oil industry. Like, there's not going to be massive revenue growth, earnings growth. They've got a lot of debt, so your share price gain isn't huge, but they are sold off too much. You'll see some sort of share gain in them at some point. So, Micron, I've actually not looked at Micron, how that's actually doing really. You know what? I'll just search it up. But I know that one sat at like really cheap valuations for a long time. It has gone up a little bit since then. It's still been quite flat, really. Micron, low, I think, still not a bad stock. I need to look into it fully. I've had a few people ask me about that one, but I'm sure it's doing quite well at a pretty cheap valuation, really. So it might be a good one to go buy. But like I say, I'll have to have a proper look into it. But yeah, Micron's not a bad one. So I say sometimes I need to have a proper one in. Have I checked out Gravity? No, I don't know. I don't actually know that company. Workhorse, yeah, I own Workhorse. Not a huge position. I think if it gets the contract, it'll be huge for the company, obviously. How do I research my stocks? I research through, obviously, I normally go through Google, just get the share price, P ratio, dividend, is it profitable? Normally then go into Simply Wall Street. I get a good hand of like the financials. Has it grown over the last few years? What's the growth like? What are people expecting growth to be? Get a better look into like the balance sheet and stuff. And then I'll probably go from there onto the annual report, read the annual report. I'll probably go read, listen to a conference call, the last conference call, and like get a good insight from there. Might search through the few articles, see if there's any articles on them. Sometimes like they're not saying like they're getting investigated for something, but it'll be on the news side of it. So I'll check that one out. And yeah, it'll take me about. It depends how big the company is and like how many income streams it has. It probably takes me about 3 or 4 hours to go through a company if I'm like for the full stage. But sometimes I'm not. I can get through a company in 10 minutes and go, I'm not buying it, and then it's just knocked on the head. Which subscription do I have on Simply Wall Street? I think it's just a normal one. I think like full price is £85, but if you sign up, do the trial, and then when your trial ends, they normally send you an offer through for like 30% off the normal price. So I actually only pay like £50 a year for it. So it might be £55 or something, but I think for what you get off Simple Wall Street for that amount of money, it's worth it. So um, yeah, I mean it's a good one in my opinion. Any thoughts that the market will crash? Like I've said for a while, I think the stock market is definitely overvalued. It's due a pullback. Um, so I think we're starting to get it a little bit in the US side of it. At the moment, Simple Wall Street is £60. Ah, cool. Is that? I guess I must have just totally knocked the price down. Yeah, money printer does go, bro. Yeah, yeah. Every time, isn't it? And what we betting that they start putting money in it now, it's starting to go down a little bit. Everyone just says trim positions, but how do you decide how much to trim? That goes down to you. You get honestly, like you get so much better at it the longer you do it. Just like anything, like literally, you learn to ride a bike. First couple of times you fall off, then you can, ride a bike, and then you do it more and more. You can start doing, other stuff on it, going up hills and what have you, going up ramps, whatever. Just one of those. You just get better as you go on. I personally like looking at. I've got like kind of a full video on like how I manage positions, but you've got to kind of like look at a company and think who, because at the end of the day, your share price goes up because more people are buying the company, and you've just got to look at a company and say, is this still going to go up in value? Are people still wanting to buy it? And obviously, if, like there's so much growth factored in, the share price isn't going to go up because people aren't going to buy it. So that's when it's a time to like look at maybe trimming your positions. I also trim positions when there's a better opportunity out there to go buy something. So let's say I buy a company, it's gone up 100%. Then I think it's probably going to go up 20% here. If I see a company where I can go make 100% in a company, then I go put the money in there to make 100% on it. Cineworld, it's one of those. It's if it makes it through, there's definitely going to be share price gain, isn't there? It's not done too bad at the moment, anyway. On like a bit of a recovery side of it, so there's a lot of risk, but there's potential for rewards for Cineworld. If it makes it through, obviously it's going to do okay, isn't it? So, I'm going to try and not talk so much and like get through as many questions as I can today. I've got to keep telling myself that. Airtel is a great value, huge growth in dividend. Yeah, Airtel Africa, yeah, AA, UK Stock Exchange. Dividend yields like 7% right now, and it still has good earnings and revenue growth. Totally agree. Good company. If you had to pick three stocks for the next decade, what would I buy? That's a tricky one because like 10 years, like you can kind of predict the next 5 years, but when you get to 10 years, it's quite hard to predict what's going to do well. Is there going to be some more like disruptors in the sector? So that's why I always say when I buy stocks, I'm buying for 2 to 5 years because you can kind of see that. Whereas 10 years, it's a bit harder to see. But obviously, I think Facebook probably be around there. I'd probably say Tesla, but like say you don't know what competition could come in. Like Neo start dominating Tesla. You can't see it happening in the next 3, 4 years, but you don't know where it'll be in 6, 7 years. You get what I mean? Obviously, all the other vehicles will try catch up to Tesla as well. So that's always a tricky one. But yeah, probably Facebook, Tesla, and I mean Microsoft are probably still going to be up there, aren't they? Maybe Microsoft. Mothercare. I've not looked into the company for a long, long time, but I know they're struggling, so I probably won't touch it. I mean, it's high street, isn't it? Like literally, like every high street company, I try and avoid unless it shows me something good on the like online growth side of it. Especially now, like I didn't like retail before. After COVID, I don't like it. Definitely don't like it now. Amigo. I can't remember that. I've looked at it, but I can't remember it. Paul Greggs this week. Yeah, Greggs is one of those, and I think that as soon as the realization of students coming back and that earnings report kicks in, I think we'll see Greggs kick on. I generally think it'll do well in the next kind of 6 months. I think we'll see Greggs come back to life, and I think there'll be some good gains on Greggs. So we'll see what happens. That's why it was my biggest position, but now Boohoo is. But Tesla, great company, so much potential, so much potential. Just the valuation, at some point you got to say, like, realistically, when you're pricing in 3-4 years of growth at these sort of valuations, is it worth buying? So are all of my stocks held in an ISA? No, I hold some. So I hold some in my ISA, but I also own some in DeGiro. I only started using an ISA, a bit stupid. I only started using an ISA like a year ago. I should have done it so much earlier. But yeah, I have some in DeGiro and in Trading 212. But also you can't sometimes get some stocks in an ISA, especially like ADRs. So they don't go in my ISA, they go in my DeGiro account. Thoughts about GAN? I've got a full video on them. Like I say, the online gambling side of it in the US is going to explode over the next 2 to 5 years. I think it's worth having a player in there. If it's DraftKings, if it's Golden Nugget, GAN's different because obviously it's helping companies get online and takes a commission. So it's not kind of competing with like DraftKings, Golden Nugget. It's different to them, but it's going to be a massive growth sector, isn't it? So I would look at one of them. I looked at Golden Nugget actually this weekend. I have to wait for the merger before I even consider buying it, but they have a lot of potential. So do DraftKings, to be fair. So Upwork, I like. I just want it a bit cheaper. I actually looked into that one as well this weekend. Amazon, great company. The problem is with Amazon is like I always say, like I always wait for a discount and then it does happen and then I still don't buy it. I should do. Do I still like GAN? Yeah, yeah. Like obviously, like when I buy a company, I'm buying a company for 2 to 5 years. Like I don't change my mind after buying it after a week. Like over the first 6 months, not really bothered where the company goes. It can go wherever it wants. Um, it can go down. I'm not bothered. I like them to go down because I buy them more. But like I don't expect the results for GAN to come in until 2 to 5 years. Until a lot of these states get like the gambling gets allowed, the revenue won't explode as much as it can do. But it's still doing quite well at the moment, even when it's only got like 10 out of 50 states allowed to gamble. So loads of potential in GAN. Loads of potential. Do I think the market will drop further on Tuesday? That's a tricky one. I think that because we've had 2 red days, I expect the green to be on Tuesday. Normally have people come in. The interesting thing on Tuesday for me is if it goes green and then it reverses, that'll be a sign that we've got some weakness coming in. So we'll see what happens. Have I dabbled into AIM stocks? Yeah, I own a few. I believe Boohoo is on that exchange. I think Dark Group is. Dark Group's actually named Jet2 now, so I can actually stop calling Dark Group. Yeah, Jet2, I believe, is on that exchange. So yeah, it's one of those. Sometimes there's some good companies on there, some big companies as well. So I won't worry about it too much. Gold stocks are one things that I don't really touch that much. Spotify, good company. Like literally, that's going to dominate the music streaming side of it for a long time, isn't it? So they will do really well. The problem is the valuation side of it. Let's hope they do a bad earnings. Stock goes down 30%. I'll buy it. that's what I'll do with Spotify if that was to happen. 3M 150 a buy. Yeah, I think 3M's decent buy at that prices. The problem is I never bought into that company because realistically, where's the share price going to go up? Is it 30%? You're going to collect a dividend as well. It's more of a dividend play. Like there's some share price gain and there's some dividend gain, but realistically, you're probably not going to make 100% on that stock. And I rather be a little bit more aggressive in the investing and get something else. I don't know that stock. FTSE seems to be really cheap. Do you mean like the actual the index, or do you mean just stocks on the FTSE in general? I mean, I won't buy the FTSE because you're pretty much limiting your returns there. But some good stocks in it. Any thoughts on supply at Me Capital? I've I've not actually looked into the company properly. It looks a bit of a risky one from what I have seen, but I can't talk about it that much because I haven't looked into it. National Express declining. Yeah, we just talked about it 5 minutes into the stream. I think National Express is over the next 2 to 5 years is solid at these prices. Even if it don't go back to where it was, it goes back to £2 stock, 100% upside at these prices. Worst case scenario. So I won't worry about it. But I'm doing a video on National Express tomorrow actually. Been looking into Dropbox. Dropbox, I owned it since 2019, and good company. I mean, it's never got the respect it deserves because it's got people like Google in its space, Microsoft in its space, but it's still a company that pulls out double-digit revenue growth, double-digit profit growth, very good balance sheet. For me, Dropbox is, and it's a very cheap valuation. Like I swear, the P ratio or the forward P is like 20 or something like that. Stupid for a company that grows like that with a clean balance sheet. Easy upside on that one. I've been a big fan for a while. I just noticed I was trading with CJ. They put that comment in. Hope you're doing well. But yeah, massive potential with Dropbox. Fastly, don't know that much. Sorry, I can't really. I've looked into much, but yeah, I don't want to talk about companies that I don't know that well. Neo, got a full video on them, but there's potential there. They just need to get more to profitability first before I can invest in them. But if they carried on doing what they're doing for another year, 2 years, I could see myself buying Neo. Could be a massive player, especially in China, you know. Rolls Royce, avoid, awful. Missed that question, sorry. Pinterest seems a massive upside over the next 5 years. Yeah, big, massive fan of Pinterest. Massive potential in that one. I'm a bit gutted it's gone up already because I wanted to make that a big position in my portfolio. I think there's, like I said, massive potential when they start ramping up the international advertising side of it on that platform. Easy winner. Even though I'm nearly up 100% on Pinterest, but I'm still not selling because the company has so much more to develop in the next 2 years that even though the valuation is kind of crazy and I can't buy at these valuations, I still think the company's fat. It's got so much more potential to achieve. So normally, if it was any other company, I might have sold out of these sort of like big, massive jumps. But I love Pinterest. Love Pinterest. Cloudflare, don't know that much. Seems a good stock though. How many rental properties do I have, and how are they mortgaged? So I currently own kind of 3 properties. Basically, one of the properties was originally a house, but it's actually been split up into 2 flats. So I guess you can kind of class that as 2 properties, right? I don't know, you tell me. But yeah, I mean, it is 2 properties, right? And then I own another property as well. 2 of the properties are currently in like family at the moment, but one of them probably actually my family's going to move out of it, and then I probably rent it out there. Even though it's family, it's still like a bit of money contributed, which is fine really. And the other property is going out. That's why I weren't able to make videos on Thursday and Friday because I was working on one of my rental properties. My rental property is off out on rent on the 31st of October, so I just need to do some work on that before it goes out to rent. So it just needs some new carpets putting in, some new white goods putting in. It needed painting as well. So yeah, that's going out. I mean, if you guys want, I can do a video around it if you want to see it while no one's in it. That would be fine. But yeah, the mortgage originally was like 40. I bought the property for 113, but they needed a lot of work doing. I think the mortgage was 45 grand. I think there's like 25 or 30 grand left on the mortgage, which isn't bad really. There's a lot of capital on there, and like the rent's going to be like 500 a month, and I think the property is actually worth like 180 grand now, and like I say, I bought it for 113. So there's been like a lot of gain on it. So if I was to sell it, it would actually be quite nice, really. But I'm quite happy just to get that rental income, because like if that rental income comes in, I can just put it straight into stocks. And that's what I like doing. I just like just like capital coming in and then putting them into stocks and like getting that money to work for you. Like if I sold it, even though I'd have a nice chunk of money, the problem is that it's just there. It's just sat there, and I guess you could load that into stocks really, but I like to keep that property and just let the income coming in really. To be fair, so yeah, I mean I can do more property videos if you want it on the channel, that'd be totally fine. But yeah, I like to have another property at some point, so we'll see what happens. Investigation ongoing with Barrett Homes, yes, and Taylor Wimpey. Yeah, spread your risks. Yeah, you got exactly. You've got, what was if the stock market crashes? You know, I always say you got to have as many income streams as you can to make yourself, you know, cover yourself in any situation. Definitely, the more income streams you have, the better you are. So yeah, the more you increase, like I think I read a book once called The Rich Dad Poor Dad, and that talks about income streams. Fantastic book. If you want a financial book to read, read that. Wildcard stock, nah, I won't touch it. It's gonna get dissolved, isn't it? So many problems going on there. I made a video on Wildcard when it was actually €30, and that's when it actually like just totally crashed because of the problems with the money they had on the balance sheet, and they lied about it. Can you imagine? They actually lied about £2 billion. I mean, how'd they get away with like saying we had £2 billion for so long? And then the stock went down, obviously quite a lot, didn't it? But it's probably going to get dissolved, isn't it? Wouldn't touch it. And I got a lot of hate for making that Wirecard video. When I actually made it, I did get a lot of hate about the Wirecard video, and now it went from €30 down to like €3. Won't touch it. Disney, big fan. Yeah. Which is better, Carnival in the UK or the US market? Probably the UK. It doesn't actually make too much difference until the dividend comes back, because if you bought in the US, you would have to pay the tax on the dividend. So you'd probably be best getting it in the UK and then on your ISA. You won't pay tax on your dividend. So yeah, probably on the UK side. I have it on the US side because I used to just do US stocks only. Sony, I've not looked into for a while. I think last time I checked, the problem is with Sony is that you're not going to get massive capital appreciation on it. So you can buy it if you want, but you'll be kind of limited on your gains. So it depends how risky you want to be in the stock market. Nintendo, I can't remember what valuation they're at off on top of my head, but I think they're bringing some new consoles out at the right valuation. Nintendo is a buy. I can't, without knowing the valuation right now, I don't know. AstraZeneca is one of those. It's a vaccine stock, isn't it? You know, if they get the vaccine right and they're the one that are successful, you're on a winner. The problem is that in that right now, there's going to be 19 losers, and you might get one of the 19 losers. Get it right, you'll do really well from it. Nvidia, big fan of Nvidia. So yeah, I'll rate Nvidia buy at the right price. AMD, same again, great company, right price, definitely a buy. Like AMD as well. Best cloud stock, you got millions to choose from. Dropbox, Microsoft, Google, Amazon, big sector. Do I still like Revolve? Yeah, still a fan of Revolve. I think I was up like 23% at one point, dropped down to about 12% up at the moment. But if I'm honest, I prefer Boohoo over Revolve. So I would focus on buying Boohoo right now than Revolve, but I still like it. I still think there's a lot of potential there. I need to do a bit more research, been looking into PVH stock. They own Tommy Hilfiger and also Calvin Klein. So that might be another fashion stock that I look at. I've also been looking at Levi's, but I need to do a bit more research into them. Intel is trading like a value stock and looks really cheap. Yeah, I would rate Intel a buy at these sort of prices. Just for me, when I look at the company, there's probably, I would say, maybe a 50% upside on Intel, and I'd rather get into a company where there's 100% upside in the company. So even though it's not the right one for me, I would rate it a buy. Like I bought in mode the other day, and I look at in mode, I'm like, there's 100% upside there. Just the difference. Like them both, just that I like to be a little more aggressive. The problem is, like, when I buy in mode, I'm taking on a lot more risk than what Intel has. So even though I say it like it's easy and it's easy bigger gains, there's a lot of risk with that option as well. DGE, is that the drinks maker of Guinness? I'm not sure. Thanks for all your hard work. If you had 30k, where would you invest it? Oh, it just dropped off my screen. But the question about 30k, this is just my opinion. But personally, if I had 30,000, definitely wouldn't lump it in the market at one point. I'm guessing you've never been into like stock investing before, so I definitely get my knowledge up a little bit. When I'm confident, start off with I'd pick 5 big blue chip companies to start with from like my first year of investing, companies that you know how they operate, and then understand why are them big blue chip companies going to go up in value. So when you buy a company, you should always think about how am I going to make money on it? And the way you normally make money on a company is because they do well, they increase the revenue, they increase the profit. That's why the share price goes up. So look at a company, Facebook. Why is Facebook going to go up in value in the next 5 years? It's going to have more users. More users, it can advertise more. It can charge a higher rate for its advertisement. Share price is going to go up. Something like that. You pick 5 companies like that: Facebook, McDonald's, Apple, Costco, and what's another well-known company that's going to be doing quite well? Maybe Walmart or Nike. There's plenty out there. ETFs. I don't own ETFs. I like picking individual stocks. I can understand buying ETFs, but for me, I just like picking individual stocks. Do I day trade? No, I don't day trade. Long-term investor, 2 to 5 years. The thing with day trading is that I think 90% lose money. So you can try it if you want, but you're going to be more than likely one of those 9 people out of the 10 that loses money. So 5G stocks, Qualcomm's my favorite. It just needs to get to the right valuations. Thoughts on FMCI? Who I've forgotten who that is, but I think that was Helion, the other one. Helion, I need to look into, but I actually think I really like that company. I need to look into it a bit more. I need to wait for it to come public as well. But I think there's potential for that one. But yeah, Hammerson, don't know that much. Try day trading with virtual money and soon learn your lesson. Yeah, good point. Good point. Yeah. Yeah, if you think you're good at day trading and you think you can do it, first of all, do it with fake money. There's loads of things out there where you can do it with fake money. Give it a go. It is a very tricky thing. Like, if you can do it, big rewards, credit to you. It is hard to do. But thoughts on Royal Dutch Shell? We talked about it a little bit earlier, and I'll be doing a video on Wednesday a little bit about it. 4D Pharmaceuticals, don't know that one. Sorry, I can't help you on that one. My pharmaceutical companies go as far as GW. That's it. Normally, I don't buy into this sort of industry. How are we doing? Half an hour in. I'll say we might go for another 15 minutes. I can do a little bit of a longer one today. Oil to bounce back post-COVID. Yeah, of course. Oil has to bounce back at some point, and that's where you'll see a lot of these oil stocks come back. Like the need for oil will increase. It's not going anywhere, and when it does, you'll see a lot of these share prices come up. Greg's same as the last kind of like 3 months. Still a massive fan of it. C Limited heard really good things about that company. Need to look into it a little bit more. Okay, yeah. For vaccines for Europe, non-profit. Would you do any emerging market stock video? Potentially, if the demand was there, I would potentially do it. So would now be a time to buy oil if it's going to go up? I think oil stocks are definitely undervalued at these sort of prices for sure. Um, I still don't like them enough to buy, but the oil demand has to come back at some point, right? And that's when they are far too sold off. Do I think the market will continue to drop? Yeah, we kind of said about it a bit earlier on. I think it'd be probably green on the Tuesday open for the US stocks, and if it reverses red, that'll be really interesting. But I think we could probably see a green day on Tuesday. I think Wednesday could be the more interesting one out of the days. Tobacco stocks cheap, but would you own? Yeah, I own Altria Group. That's a tobacco company that I own. I think I get a 9% dividend on that. The only dividend stock I've got left in my portfolio now. I think the share price is a little bit too cheap as well. So yeah, tobacco companies are definitely one of the best dividend players that you could probably get in your portfolio right now for sure. I like the tobacco companies. Do you think Boeing is a good buy? Yeah, I own Boeing. I think that it's going to be a rough, probably another rough year for them, but I think they'll come back at some point. Where they, you look at the stock price, how much it's sold off. I'm a fan of it. Let's see. No, I don't know that one. Sorry, Taylor Impact. When you go TLW. Would you buy Neo? I would buy Neo if it carries on how it's doing in the next kind of 2 years. If it carries on at this sort of rate and it carries on, if it gets close to profitability, yeah, I can see myself buying Neo. Any space in your portfolio for speculative stocks? Was looking at SYME. Yeah, we had that question a bit earlier. Not 100% sure in that company. I've not looked into it enough to give my opinion, but what I have seen of it seems very risky. I'd be looking at more of maybe an EV space right now if I was going there. Well, Workhorse, for example. Apple overvalued. Yeah, it is overvalued, isn't it? Like, it's a great company, but when you look at, the I've lost my light. When you look at what the company's doing at the moment, it's not massive revenue growth. Sure, it's a safe company. iPhones are always going to be needed, but balance sheet is getting slightly worse, isn't it? And when you look at the P ratio, compared to its like historic value of its P, highest it's ever been. So, I mean, it had a good earnings, but does that justify the market cap going up by $1 billion? I think that it is definitely on the overvalued side. But I am a fan of Apple. Like, don't get me wrong. Like, I'd still rate it a buy. I just think there's a better valuation on it. This live is popped up on my feed. Don't call it sub. Watch. I think that said, do I normally invest in the UK stocks? But if you're new here, welcome. Hit the red button. That's the big subscribe button. That'll be absolutely amazing. UK stocks, yeah, we do talk about UK stocks on this channel quite a bit. I normally try to do at least 2 UK stock videos every week. Sometimes it does go to 1, but I do at least try to do 2 UK stock videos. But yeah, I cover the US, cover the UK. I try and mix it up, but we've been quite focused on the UK stuff quite recently because that's where the better valuations have been. But obviously, the news has kind of shifted to the US at the moment because of the big massive drop. But we do cover both. I've got a portfolio in the US, a portfolio for UK stocks, so we do cover both of them. Best Nasdaq stocks to buy now, which will hold in a crash. I think that I think we'll have to see what happens on Tuesday and Wednesday to kind of get a better idea of valuations. Vanguard funds, should I transfer to ARK Invest? I mean, you can do if you want. Obviously, you're going ARK Invest, you're going for like more disruptive companies, bit more of a risk. But I mean, they've done well. They've done well on ARK Invest. Look at Tesla. Tesla's done quite well for them. Trade Desk, I don't know that well, but what I have heard has been good about the company. So I think it's got a pretty decent growth. I don't know them two companies. Sorry, I'm guessing the UK companies. Um, Looking for UK. Yeah, there's plenty of UK stuff. I'm actually doing 2 UK videos. Do you think the drop in Tesla is due to the exclusion of the S&P or just a general sell-off? Oh yeah, it's Tesla's obviously overvalued. So you got that. You've got the S&P not including it, which that was kind of priced into the stock. So then obviously that's going to take it down a little bit more. But I think Battery Day coming up soon will probably be good news for the company. So yeah, I think it's a combination of overvalued and that news. It was priced to perfection. I think that was about Boohoo and where I see Boohoo going. Yeah, I see Boohoo going to 600. Yeah, in probably the next 3 years, which at the moment would give me nearly 200% upside, which is good. Very exciting. I'm next going to sell 10% of my Boohoo position when it gets to 350. Kia Group. I've not looked into it fully, but I think the balance sheet was a little bit horrible on that one. But I think it, like I say, I think it is getting some decent contracts. I think I'll just have to check the balance sheet on that. I really struggle to buy companies with bad balance sheets. Like sometimes I can push myself to a not a terrible, but an okay in the middle. I can just about get there, but I think they had a terrible balance sheet. Square stock. I've got a video on them. I did it about 3 weeks ago, so that probably be better than what I can say in the next 1 minute. But Square, big fan of Square. Obviously, payment side will do really well. Cash App is doing really well. Valuation is just a bit too much. If the valuation can come down to the right sort of prices, I would buy Square. It's kind of weird because Square over 2018 and 19, literally the stock was just flatlined between $80 and $60. And then all of a sudden we get to 2020 and the stock's what's it gone up 100? Look into. So yeah, I am fan Square. Just has to go at the kind of the right thing. Bond rate go up, gold go down, stock stall. Yeah, I mean there's always been relations to gold and bonds is in between stocks. You mentioned rental property in your early video, i.e., do you use your profits from shares to buy rental properties? Sometimes. Whatever money's in my stock side of it, I really don't like taking it out and putting it somewhere else. But if it has to be done, then it has to be done. But it's like a last resort that I take money out of my stock portfolio to move it into property. I like to keep them separate. But at the end of the day, if you do make money on stocks, there's nothing wrong with shifting it to making more money. But like I say, I always like shifting that money. When I made money on stocks, I like shifting it into my new company. So I buy a company, double my money, take it out, got double my money, put it into another company, double it again. And that's how I like the cycle to keep going. And that's how I built my portfolio up over the last kind of 4 years. My first, I actually watched my first video the other day. I was kind of interested to see what my first portfolio was. I kind of remembered it off the top of my head, and just what I said about the companies. And I look at my first ever portfolio, and Square was in my portfolio, which I bought for $20, and then I sold out for $45. And that was in this span of about a year and a half, I think it was. And just doubling your money in a year and a half, and then I must have moved money into Square into another company, which I probably have doubled since then. And so the money that I did put into Square and whatever company was there that I probably doubled, I probably doubled money twice in that time. And it's just one of those. Why do I not hold like Warren Buffett? Um, Sometimes I do. Sometimes I do hold stocks. Microsoft's been a very long stock in my portfolio, but the problem is that let's say you have £100, right, and make it nice and easy. If I buy a stock for £100 and it goes up to 200, that money's still in that stock, and it's £200, and I still don't have that profit. The only time you ever have money from the stock market is when you take it out again, and then you can use that money again. So if I put £100 in the stock and it went up to £200 and I just left it there for 5 years, I've doubled my money, and then eventually I could take it out, but it's just not doing anything for me. And in that time, the stock could go down. There could be better opportunities out there. If my stock goes up to from 100 to 200, I've doubled my money. I take my money out and I sell it out of that stock. I've doubled my money. If I can put that into another stock at the same sort of valuation as what that was, put it back in, double it again, then my money that I put in my companies into my stock has then earned me more money. So the quick way to cycle up your money is by putting money in, taking it out, making it work for you. If you just leave it there, it's not going to achieve you anything. If you keep your money into a stock and you don't sell it until you retire, fair enough, you would have made yourself decent money, you might have collected dividends, but you can't multiply your wealth that quick. And don't get me wrong, there's some stocks that I am happy to leave to run the long term. But I think if realistically, if you want to be aggressive, if you want to achieve anything in the stock market, unfortunately, sometimes you need to sell some stocks and then take that profit, and then you get that free money, that money that you've got from that stock to go make more money for you. And I think if you don't sell a company, you're never going to take that profit and get you more money, are you? So I always say that. How do I I think that said, how do I find out a stock is undervalued? To explain that in like 1 minute is really tricky, but there's a few key things that I'll look at. I would say that first of all, is study a stock market chart. Look at what a company is historically traded at. Has it pulled back? That's always a good sign. The P ratios are the first indicator for me. Uh, it's a lot trickier on a growth stock because obviously when you buy a growth stock, you're buying the potential for a company. Whereas if you're buying, like, let's just say a normal company, an Apple, a Facebook, a Google, I would say that seeing how much that company sells off is a good indicator. Look at what that share price was last time. So if you talk about the share price has gone back to 2017 prices, it's a sign that the company's probably sold off way too much, even if it was overvalued. I would say that P ratio, look at the P ratio. Where is that P ratio to its historic value? If it's back at P ratios of that it was in 2017, I'd say that you probably want to look. You want to buy when you're buying a company. You want to see, why is this company's share price going to go up in value, and then you got to work out that is that growth not getting factored into the share price. That's probably the thing. So there's loads of different things I'd look into, but that's the best that I could probably do in a 1 minute, if you get what I mean. National Express undervalued, yeah. National Express is a prime example. So like we're just saying about undervalued stocks, right? National Express is cheaper than what it was, I believe, in 2008 in the last recession, right? You're telling me that National Express in 2008 has grown its revenue by what? Has it probably doubled its revenue since 2008? Its profit is probably, this is off the top of my head, so I don't know if these numbers are exactly correct, but you get the idea. But the profit's probably gone up 100% since 2008, but the valuation of the stock is the same as what it was back in 2008 now. Big sign there, isn't it? So that's a big sign that it is undervalued. Yeah, I heard about SoftBank's call option. Yeah, what's happening with Greg's? Just gone into sleepy mode. Like I say, I think when we get the earnings report, it'll wake up. But you know, Greg's is a prime example of what I expect stocks to do when I buy them. I bought into Greg's. It went down a little bit. I got my average for cheaper, which now means I'm going to make more money when I sell the stock because my valuation's cheaper. But when I buy into a company, I'm not bothered what it does in the first 6 months, maybe even 12 months. It's where that company is in 2 to 5 years. And you look at Greg's at these sort of valuations and you think 2 to 5 years, it's going to do well, isn't it? You know, can't tell me that when Greg's revenue and profit increases in the next 2 years, you can't tell me that share price is going to be lower than what it is right now. Cineworld's will be taken over by the Chinese. There is some talk about Cineworld getting bought out. We'll see. Energy sector, BP. Yeah, we kind of talked about some of the oil stocks. They're just massive. I can't buy into them because too many things, too many external things affect the company, and I don't like that. I like buying into companies I know that if they grow the profit and revenue, the share price goes up. Not the share price gets affected because someone decided to fly an airplane over a country they're not supposed to do it. I don't like that. Um, so that's always the thing that put me off like oil stocks. But at these sort of valuations, they are definitely very cheap and they are probably undervalued. Will go up in 2 years' time. Uh, Probably not 100%, but definitely a little bit. View on Tesla, we talked about it a little bit earlier. Great company, very, very, very good company. Just the valuation. If the valuation gets to a better price, I can buy it. Uranium mining companies. Yeah, same again. Not a huge fan of mining companies, just because of my knowledge. Really, not saying they're bad companies to invest in. Just the whole mining sector. When I buy a company, I need to know the sector. I need to know what's going on. Then I know that when I put money, if I'm putting thousands of pounds, I need to be confident that I know that sector. Buying the mining sector, I'm not confident. That's the problem, and I can't be 100% confident that that stock will go up. And I need to be that confident putting my money into companies. It's a personal thing, If you understand mining companies, you might be able to find a good one in there. For me, I just don't have the full knowledge of like certain metals and prices and the competition and stuff like that. So, have I seen the film Trading Places? Um, nope, not seen that one. Have you had any stock failures? I actually, yeah. So when I sold Walgreens the other day, that's the first time I've actually sold a stock at a loss, which was kind of crazy. Actually recovering. Um, so it was one of those where I was like, I just got to cut my losses now and move on. So I've only ever actually sold one stock at a loss in the 4 years that I've been doing stock market investing. There's a couple of times where I've not made um, loads of money on a company. Like I was saying on the last live stream, one time I actually bought into Skechers and it had earnings that week. So I bought into Skechers like Monday, Tuesday. The earnings were Thursday, and I was like, this company is going to do fantastic. These earnings are going to be absolutely amazing. And the stock went 30% down after earnings. And literally, it took me about a year to get break even on that stock. And I sold it. I was like, I've had enough. And so sometimes, yeah, I mean, I've not sold stocks at what I potentially wanted them to get to. But um, overall, like when I look at my stock history, I'm easily in double figures for 100% returns. And then even probably like 8%, 70% returns. Probably same again, got quite a few in that sort of range. So, what type of dip do you expect from Gang after lockup expiration? It shouldn't be too bad for Gang because actually there was on the UK stock exchange. So, there shouldn't be that many insiders, like, because obviously when the IPO, they're not allowed to sell shares, but they've been on the stock market previously. So there shouldn't be that much of a problem with that one. That's why I bought it so close to its IPO. Why is that back on again? I don't know what happened there. I think there's some sort of internet connection. But let's take Huya for example. Huya is a live streaming, uh, online gaming. Gaming's going to grow. You've got new consoles coming out. So then obviously there's an explosion of people getting the consoles, new games with the consoles, more people streaming, more users. Obviously, you've got the advertising side of it. You've got esports. Esports is probably going to carry on growing quite a bit over the next few years. You've got the new contract with one of the biggest games out there, one of the biggest esports games out there, which is Legends. That's going to leave profit to grow huge, going to leave revenue to grow huge. You think about 30% revenue and profit growth over the next, 2 5 years, share price is going to go up. You think about the balance sheet, clean balance sheet as well. You look at the valuation of the company. I think the forward P was like 20 on it. A company with 30% revenue growth at a forward P of 20, very, very rare. I've only ever seen it a couple of times. So when you put the valuation, the potential profit side of it, the revenue side of it, company's going to do really well. Like the company's undervalued at these sort of prices. Like this company should probably be in the $30 range. That would be a fair valuation for this company right now. So you think about that's 50% upside. And then when you factor in 30% revenue growth over the next 3 years, 30% profit growth over the next 3 years, the share price once again going to reflect that. At least going to go up another 50%. Easy money. I'll probably do a couple more questions, then I call it time because we're on 51 minutes. I was said I was only going to do another 15 minutes, but we've gone past it. We'll try to get to the hour mark and then we'll call it time there. So in mode, yeah, big fan of in mode. Currently don't know the price actually right now. Speaking of it, but I think even at these sort of prices, I think it's a good chance to buy. Personally, I think in mode is I've not gone that heavy into a company for a very long time. Normally, when I buy a company, I normally buy like 25% of the position that I want and then add into it over the course of like 3 months, hoping the share price goes down. If it does go up, I don't mind buying up to about 10% where the share price is. If it goes past 10%, I don't really want to be buying then because it's just gone a bit too much for me. But in mode, I would buy that one of these sort of prices. And like I said, I bought in quite heavy. I bought about 50% of my position in that one straight off the bat. And then I actually, when the stock went down 7%, I then increased my position by another 20%, I think it was. So I've left myself a little bit of room to still buy some more, but that would only be in the case over the next 3 months, the stock goes down quite a bit. And that's what I'll wait for. If I could go all in one stock, what would it be? Facebook. Facebook is, in my opinion, probably the best company on the stock market for the last 12 months. And at these sort of valuations, is probably still the best one. Amazing growth. Why do I keep so many positions and what is your criteria? I actually don't think I've got that many positions. On my US portfolio, I think that you should really keep between 5 to 15 positions in your portfolio. Over 15 is quite hard to keep up with the conference calls and annual reports and keeping up with the news. So I would say 15 is probably the maximum. I think I've got about 16 right now, or maybe 15. So I am kind of on the maximum side of it, but I can keep up with them all. They're all fantastic companies in my US portfolio. So I would say that I haven't got that many companies in there. My UK one's a little bit busier right now, and I am going to be trimming that down slightly, but it's one of those. There's a lot of opportunities out there right now. But over the next 12 months, you'll see my stock market portfolio on my UK side. I think I've got about 20. So obviously that needs to drop down by about 5 stocks. But over the next 12 months, you guys watch. I'll start trimming them positions down and getting it back to a reasonable amount when the time is right. I'm just going to wait for that little bit of money to come in. I've actually put a sell order in for one of my UK stocks on Monday. So I am trimming down one slightly. So yeah, I don't think I've got that many. Probably on the UK side, maybe a couple more than what I'd like, but still not too bad. I think there's any future for the Rolls-Royce company may survive. Rolls-Royce for me is just historically it's been awful. Growth wise, it's not going to be fantastic. Balance sheet wise, it's pretty awful. I just think there's better opportunities out there than Rolls-Royce personally. I won't touch it. I mean, it is a cheap stock, but hey. Thoughts on Taylor Wimpey and the investigation? Is that competition with the other house builders and then the investigation? The other house builders, I think I would generally probably look at owning at least one of the house builders. There's so much demand for house builders or houses. There could be many competitors. That's totally fine. And Taylor Wimpey took advantage by buying a lot of land in COVID as well. Don't forget that. Investigation wise, we'll see what happens with that. But still, good company. I would own at least one house builder. I think Vistry are reporting earnings this week, but they're fantastic. Red Row, Persimmon, Taylor Wimpey, Parrot Developments, MG Gleason. I think they're all pretty good house builders. I would look at definitely owning one of them. India is Facebook target, not China. Not sure about what that one meant. Softcat is a great at the right price. So is it right price? Softcat. I've heard a few people talk about Softcat. Not looked into it myself, so I can't say that much about Softcat. Sorry. If I knew the company a little bit more, I'd give my opinion on it, but I don't know it that well. Does Facebook have the potential to become bigger than Apple even without China? Potentially. We'll see. We'll see what happens. Facebook's just been disrespected for so long. That's what you got to remember. I think people are starting to wake up to Facebook now. No, I've not looked into them. I said that a few times tonight. I need to up my game and like looking into stocks, don't I? There's definitely a few stocks looked into. Yeah, IT resellers. I can imagine. Yeah, that work at home trend. Clovis, not heard of that one either. Dark Group. Yep, still a fan of Dark Group. Big fan. We can actually call them Jet 2 now. They've announced the change in the name to Jet 2. So we can actually stop calling them Dark Group, which is absolutely amazing. Don't do binary options. How come you don't short stocks? Um, I have considered it a few times. There was a few stocks I was actually looking at shorting over the last coming month now. Apple and Tesla being one of them. I was like, this is just absolutely insane, and I probably should have done as well. Looking at it now, but the problem is that I'm a fan of stocks. Like I hate to bet against stocks because literally you don't know where the stock market's going to go. It's like day trading, isn't it? That's the big problem about it. And in the long term, stocks always go up, no matter what point happen, whatever point in history. The stock market has always gone up. World wars, the stock market's gone up after it. Terrorist attacks, the stock market has gone up for it. We've had a worldwide pandemic where the economy's pretty much been shut down completely. The stock market's come back from it. Whatever you throw at the stock market going forward, whatever dips happen, the stock market will recover it. It's one of those things. And to bet against that is risky because you're not on the winning side. The stock market bull side has won 100% of the time in history. To bet against the winner, it's difficult, isn't it? The FTSE hasn't gone up. I tell you what, I'll take a bet with you right now. If you think the FTSE in 20 years' time won't be higher than what it is right now, I'll take that bet with you. I'll even take it in 10 years. 5 years, I'd go the FTSE is higher than what it is right now. And I'll take anyone on a bet right now. And I'm not a fan of FTSE either. Like I think it's one of the worst indexes, but I'd still say it's going to be higher in a few years' time. The only reason why it's so low is because of Brexit. If Brexit weren't happening, we pre-COVID, we probably have had FTSE at a higher price than what it is right now. Intel, yeah, like Intel. Crypto, it's one of those, like I say, if I'm putting my money into something like crypto, I need to have confidence that my money is going to bring me back more money. There's no point in me putting, hard-earned money into something and not knowing I'm going to get that return. It's just too risky. It's like gambling, isn't it? And for me, I don't know enough about crypto to get into that sort of market. For some of you guys that have knowledge about crypto, you know what you're doing. I can see you're doing well in it. But for me, you've got to buy stuff that you know. You've got to buy stuff that you know you're going to make money on. And crypto is one of those that I'm not sure that I could do it in the right way. And I have to be smart with my money. Give me something like National Express, Greg's, InMode. Pretty confident I can make money on them. See if a few of you guys are not a big fan of crypto. Go on, I'll take one more question and I think I'll call it wraps there. Want to finish on a good question. Fire a good question my way. Find me one good question to finish off. Not not very good. Not very good with funds. Intel Intel recover. I actually did a video on Intel um, a few weeks ago. Do you add to positions that are up? We've just kind of touched on that a few minutes ago, but yes, if I really like the company, I see massive when they have massive potential. If the stock goes up to about a 10% range, I'll still add into it. Very rare that I average up, but I can do it sometimes. Did it with Huya. Huya, I averaged up on one of the last ones that I actually did. Average up on. It's very rare I do it, but sometimes I do. What percentage of I'll finish off on this one. What percentage of portfolio do I keep in cash? So that's a very good question. So if the stock market is undervalued, I'm very low on cash. So you'd go back to COVID, I went below 10% in cash because I was just buying everything. At one point, I literally went down to about 5% in cash. When the stock market gets to fair value, I'm normally about 15% in cash. When the stock market gets to overvalue territory, I'm about 20% to 30% in cash to go buy stocks. Right now, I'm actually 25% in cash, somewhere around there. I was towards 30% cash until I bought in mode the other day. I bought quite a bit of in mode, and that took my cash pile quite a bit down. But yeah, I'm still 25% about in cash right now. Right, I'll call it a wrap there because we've been going for about 60 minutes, which is longer than what I thought I'd be doing. But I've enjoyed it. I love doing the Q&As. I think it's good for me to give a bit more detail to some of you guys' questions than what I can do on comment sections. So I hope you guys enjoyed it. Hopefully we'll do another one at some point. I think right now we're at about 3,700 subscribers. So if we can get the some likes going on the video, get some more subscribers there, try get to 4,000 subscribers. I'll try do a 4,000 subscriber live stream special. So the quicker we do it, the quicker I'll do one. At the sort of rate that we're doing right now, we might get there by next weekend. So we'll see if we can get there next weekend. If we do, I'll do one. If not, I'll leave it another week. But I'll try do one on my 4,000 subscriber special anyway. Because like I said, I enjoy doing them, and I think some of you guys like tuning in and firing a few questions at me. So thank you so much for spending your Sunday evening with me rather than doing something fun. There's plenty of stuff on TV you could be watching right now. So thanks so much for joining me. Thanks for all the support recently as well, guys. It really does mean a lot. Really appreciate you guys coming to check out my videos every day. Nearly at the moment, I'm doing them. So yeah, Monday I've got a National Express video coming up for you guys tomorrow. So maybe tune in for that one. And I hope you have a really good rest of your weekend. Not much of it left now, but I hope you do enjoy it. And have a very good week next week with the stock market open. Like I say, Tuesday will be very interesting when we get the US side of it, and Wednesday, I think, as well. We'll see what opportunities come there. If I am making any moves, I will try and update you as soon as I can with buying and selling some stuff anyway. So thank you so much, and I'll call it there. And like I say, have a good rest of your evening, guys.